hill. Oh, my joy in the eyes of blue. Oh, I'm running for the city. I got the new world in my blues.
They ain't got no muscle, no hustle, no backbone. I stand alone, not tripping. Just saying, I'm different. Ain't hanging on to the coattails.
Hi, this is MrNotAdvice. Thanks for joining me for this podcast today. Please remember that this podcast is for informational purposes only. Nothing in this podcast should be construed as an offer to buy or sell anything, nor should it be construed as specific advice or advice in any manner from myself or any of my guests. Thank you very much. Well, good afternoon. This is MrNotAdvice, and I'm joined today by my special guest, Mr. Greg Reyes. And Greg, I was sort of surprised. I saw a little over, a couple weeks ago that you had made a decision to step back from Twitter for a while. I was saddened by it because, I had, you have provided such good information, objective opinion, unbiased. And I thought, I would like to ask you, would you like to provide some color to that, decision?
Sure, of course. And let me start out by thanking you for having me on. I really like this format, and I like the venue as a place to have a constructive conversation about companies. But as it relates to Twitter, the reason that I came to this decision is I was out to dinner with my family. My daughter came in from town to visit, and we're having dinner, and I happened to glance at my Twitter feed, and I saw that somebody was accusing me of spreading inside information or sharing inside information that was non-public as it related to ENVX's use of the ATM. And I could not respond to that allegation because I had not shared any inside or information that was non-public. I don't have access to any inside information that's non-public. And I had simply, responded by saying that there's some confusion about the ATM, that I spoke to the company, and the company, in fact, confirmed that they were done. And in fact, the CFO had said on the JP Morgan webcast that they did in early Q2 that they were done accessing the ATM. And then it kind of occurred to me that I am compelled to respond to allegations that I, in fact, had committed a crime, which was just not true. And, my wife said, what are you doing? We're having a family dinner. And I shared it with her. And she said, oh, my God, Greg, why are you even doing this? And over the dinner, I came to the conclusion that, I'm on Twitter for my pleasure, not other people's pleasure. And I enjoy sharing my thoughts about companies. I'm an experienced public company CEO. And I like to share my musings about companies that I'm interested in or involved in, but I don't need to be accused of committing crimes. I don't want to have to spend my time responding to allegations like that. And then upon reflection, the number of attacks and insults and ad hominem attacks and derogatory comments about me and my family, just caused me to reflect and say, why am I doing this? What's in it for me? It just is a stressor and a time sink. So I made a decision to just stop tweeting. I may come back to it at some point, but I'm really enjoying my hiatus. And in fact, one of the reasons that I'm excited about this podcast is, a number of folks have sent me DMs, and my DM is flooded with questions asking me my opinion about this company or that company. And I think that this is a good platform to at least share my opinions and my views as it relates to the companies that we're going to be talking about, and my assessment of how they're stacking up against investor expectations.
Yeah, it's unfortunate. I think Twitter is a venue where people feel like they can not think before they share their thoughts. Also, because of the anonymity, they they probably take a little bit more license. And I've seen a couple posts, even when I announced that I was going to do a podcast with you. And it's, you're right. It's a serious business when somebody, especially for somebody at your capacity that is a former very successful CEO, and to make that type of accusation out there in the public space, you know, I I look at that like, well, you're sort of a soft target then. And I'm extremely thankful that you agreed to do this podcast, because I know for a fact that the last podcast we did, we got so much commentary about how helpful it was, and the theme of the comments was there was objectivity to it, right? Um, we weren't, for lack of a better phrase, drinking the Kool-Aid either on the bullish or bearish side. We were talking about what we know today and what, looking forward, how probable we felt that some of the statements by the company or their business plan would be in terms of the execute. So, I'm sorry to hear that, and it's beyond me why a person who is just offering their skill, their knowledge, and time is getting attacked to that degree. It just makes no sense to me. So
No,
I'm
it's
glad
it,
that you're the type of
it,
person who
it
turn the other cheek.
thank you. And I agree with you. I think the anonymity that Twitter provides makes it easy for people to say things that they wouldn't otherwise say if they weren't anonymous, or they certainly wouldn't say it to somebody else's face. But I think the first company that um, I'd like to wade into is BYON,
Mhm.
because that is a name that was controversial, and I had tweeted my concerns about the CEO walking back guidance,
Mhm.
and I was barraged with a series of attacks and insults. And really all I did was say that I believe that the stock was under pressure because the CEO had walked back guidance that he gave in Q1 about the company doing $2 billion in 2024 and then growing to $3 billion in 2025, and then 30 days later walking all of that back. And I simply said that I think that the stock is going to continue to be under pressure until the company can come forward with some credible guidance coming forward as it relates to revenue and growth projections. Um, well, in their most recent conference call, they did make some progress. They had 8% year over year growth in orders. They had a 35% increase in active customers. They had a solid quarter. Unfortunately, there were some issues, and one of the biggest issues was the executive chairman, who, for all practical purposes, is the CEO, said he expects to be profitable at some point in 2025. Well, if you look at the company's cash position, and they went from approximately $250 million in Q1 down to around $186 million in Q2. Companies burning a lot of cash. They have not given guidance as to when they believe they can grow and be profitable. To say that you think it's in sometime in 2025, really has huge implications to the company's cash burn. If it's early 2025, maybe the company, will only burn, maybe another $100 million in cash over the next couple of quarters. If it's late 2025, they could find themselves in a bit of a cash pickle. So, the company can become a value trap to the extent that management isn't successful in starting to grow the business.
Right.
And I think one of the other things that put pressure on the stock, and one of the reasons that it's struggling, in the 10-11 range, is the executive chairman said that for Q3, it's typically a seasonally down quarter, but that he was hoping to be able to maintain their margins. So, now we're looking at a Q3 that could be sequentially down. You've got to assume there's going to be some, significant incremental cash burn. And the kinds of things that were talked about, quite frankly, are, they're not things to be celebrated. They're things that you should just be doing as a standard course of business, like reducing your number of SKUs and trying to add, new brands that will generate incremental revenue or getting your freight costs down.
Mm-hmm.
So, I was a big believer in Beyond. I own the stock. I bought it based on the guidance that was given, that was subsequently pulled. The stock went from, 22, 23 to 37, and here we are sitting at around 10. So, people may not like my opinion, but I certainly am entitled to it. And I'm not trying to damage the company or to attack the executive chairman, but there are some issues that are principled issues, and I think the market certainly shares my opinion and my concern. If it didn't, the stock would be in the high teens, low 20s instead of struggling to stay above 10.
Yeah, when I look at Beyond, and obviously you know it much better than I do, but I look at the macro picture. I just saw today that Americans have racked up record credit card debt. The 30-day delinquencies are rising across the board for both credit card as well as auto loans. And if we're getting, at the same time, we're seeing, Intel decides to lay off 18,000 people. We're seeing some of the large companies laying off. I saw a figure that 150,000 people have been laid off from the tech sector so far. And so for a consumer company like Beyond, there are clouds on the horizon that I think it might be an even more difficult macro environment. I mean, you and I both know that there's been just a tremendous amount of liquidity pumped into the economy. And when that liquidity stops, and it's been in the form of credit, right? How is a company such as Beyond that's trying to reestablish its name in that market space? It just puts another risk, I think, on the possible 6 to 9 month stock price. I mean, what do you think? In terms of are they preparing, or cutting costs is great, and I agree with you. I've never understood why management is seeking applause for doing the job that they're supposed to be doing. And um, I look at the Beyond right now as there's elevated risks. I looked at their free cash flow, and my gosh, it's minus 161 million on an annualized basis. So I guess my second question to you would be beyond the macro question is, uh, you know, are they going to run out of cash on an operating standpoint, where then they're going to have to either, if they have the ability to tap capital markets, or they're going to have to do some sort of dilutive financing?
Well, I think that's a legitimate question. I don't know the answer. I think the answer to a great extent hinges on how soon the company can become profitable.
Hmm.
But it certainly is something that folks should factor into their lexicon as a possible outcome. Because to the extent that the consumer's tapped out, to the extent that the economy is slowing, is there going to be the kind of tailwind and opportunity that you need for a consumer-facing business? And I don't know the answer to that, but it's certainly a legitimate concern. You know, to the credit of Marcus Lemonis, he did allude to the fact that there's white space and an opportunity for them to participate in the liquidation business, which should play into a slowing economic environment. But there were no numbers put to it. You couldn't get a sense as to what the implications of that might be to the business model. And I think the same thing exists with Zulily. They're going to be standing that up in September. And it's just not clear how much traction there's going to be or what the revenue uptake is. So I'm not negative Marcus Lemonis. I'm not negative Beyond. I'm just trying to be pragmatic about what transpired. And what transpired was there was some very exciting guidance given that even Marcus Lemonis said, I don't have the transcript in front of me, but something to the effect of that he may have been reckless in communicating that. And at the end of the day, I measure CEOs based on one thing and one thing only. Do they deliver on what they have committed to? That's the standard that I hold myself to. That's the standard that I hold other CEOs to. And that's what makes a company, in my opinion, more investable than not. If you've got a guy that's a gold standard CEO running the company and you can take to the bank what this person says quarter in and quarter out. And I think a lot still is left to be proven as it relates to BYON. Once these things are sorted out, I think it definitely is worth a look. And if they can, stand up multiple businesses that are, $1 billion plus, whether it's Overstock, Bed Bath and Beyond, and Zulily, and, they have cross selling and they've got, a customer experience that, is a flywheel for additional orders, it could be terrific. It could be incredibly inexpensive. But on the same token, if the company continues to struggle to get its traction, they can continue to burn cash. And if the economy deteriorates, it could be tough sledding. So I apologize if I offended Marcus Lemonis. I apologize if I offended anybody else. I was simply trying to share a view that was principled and based on the fact that I had ridden that thing up from 22 and ended up getting out in the mid-teens. Shame on me. But a lot of people got hurt, and a lot of people do, in fact, rely on guidance, and they do rely on statements, whether it's protected with a safe harbor provision or not. From a legal standpoint, is one matter, but from an investing standpoint, when a CEO talks about I'm going to bring on all these influencers and I'm going to do this, that, and the other, and none of these things happen, you got to make note of that because it's an important data point in I think anybody's investment lexicon. It certainly is in mine, and it should be.
Yeah, I wonder how many investors got into BYON primarily based on the star power of Mr. Lemonis. I don't know anything about him or when I've read publicly, but I, from looking at the modeling that they've done, I go back to my opening comment, which is they're going off of a data set that, quite frankly, is not normal operating credit conditions, right? Where there's just this wealth of credit available for people to be able to go out and spend. And you make a great point that it's not just one line of business. There's 3 or 4 different unique entities, brands, and it's a tough job what he's trying to do, right? All at the same time. So um, for me, looking at it, and again, I just can't understand for somebody like you who's there putting you're effectively donating your knowledge, your experience, and your expertise. You're not, and I know there's parties involved in this stock that, and in all 3 of the stocks that are what I would call sometimes irresponsible in terms of their support, defense of a stock. And I think when that happens, sometimes the loudest voice gets listened to the most. But um, bringing it back to the center and what your comments, in terms of, I fully agree. All you can go off of is what a CEO, what a management says they're going to do. What other measurement stick do you have, quite frankly? And at some point, it's, this company, you're burning $161 million, you're negative $161 million in free cash flow. Good, great, cutting expenses, but I'm certain that at some point, even if the consumer spending does not slow down, at some point, I don't know, and maybe you can clarify what options a company would have in terms of operating capital on a go-forward basis. And adding in one other point, which is I know that the credit markets are tightening up, right? We're seeing that in some of the spread blowouts. So, what would the options be for them down the road if they need to, for lack of a better phrase, buy more time?
Well, it as there's a lot of variability to how that question gets answered, right? I mean, they did say that they have signed a letter of intent to sell their headquarters, and I believe they said they thought they would net $30 million with that. So you add the 30 back to the 186 that they have, and if they're continuing to burn, call it 50, 60 million a quarter, if they don't get this figured out until the second half of next year, they could have a serious cash problem. On the same token, if they get it figured out sooner, they may not have a serious cash problem, and maybe they're going to be able to come forward with liquidation relationships that will allow them to have a tailwind into a slowing economy. I don't know, but what I do know is that when I entered the stock, it was based on guidance. It was subsequently pulled. It was based on statements about influencers and relationships with certain parties that could help drive revenue, and standing up new businesses like Zulily. And at the end of the day, here we are with a $10 stock because guidance was pulled, excuse me, with really no clarity about when this company is going to be profitable. I hope that it is. I hope he can pull it off. And for me, I did invest to a large extent. I can't quantify it, but it was a material extent that there was some star power. I mean, this is executive chairman that has a personal brand of being a quote unquote fixer. He did a great job with Camping World, but Camping World, for the most part, was a roll up of mom and pop regional camping retailers, and he's done a fine job with that. I actually thought that Marcus Lemonis was going to be to beyond what the CEO of Taco Bell became to Chipotle. When he showed up, Chipotle was around 100 or $250 a share, and now it's north of 3,000. But I think things are a little tougher than maybe Mr. Lemonis anticipated. And as we sit here, we really don't have, clear line of sight as to how this business is going to get its sea legs and going to grow profitably. And like you said, if we're in a slowing economic environment and it takes them longer and they continue to burn cash, they could have some cash issues. But time will tell. And as I said, I I don't hate the company. I didn't attack anybody personally. I just shared my opinion. And as a shareholder who had a pretty substantial position that turned into a pretty substantial loss, I think I'm entitled to share my musings. The First Amendment protects that. And, if people don't like it, they can disagree with me, but, you don't have to make it personal.
Yeah, I'm aware of some of the, without going into detail, I'm aware of some of the personal attacks that were made publicly, and I just find that ridiculous because of a difference, frankly, because of a difference of opinion. And what's ironic to me is at the end of the day, as we sit here today, right, the market has voted. There are concerns. Otherwise, the stock price wouldn't have been cut down so much. And so it's just, I appreciate the fact that you still are willing to come on and talk about this, even though, these companies, my gosh, you offer your opinion, and I guess people expect you to be, not to ever change your opinion based on new data, which quite frankly is why I think retail loses money consistently investing in stocks. Because they go in with one thesis, and by gosh, they're going to do everything they can to support that thesis. And it's like this confirmation bias that goes on. And yeah, Camping World, but roll-ups, better than I do. They're easier, I think, because you're able to bring efficiency to the operations, right? There's And so you're right. You're going in at the beginning, and there's almost like a built-in margin for them as you do a roll up. But looking at resurrecting, BYON, and then promoting these three and four other lines of business, it's a different beast, right? Than what he's done before. He's successful, no doubt about it. But and I don't want to belabor the point, but the Camping Worlds, and we're seeing it now with with the slowdown in spending for recreational vehicles and boats, and that was largely also driven by readily available cheap credit. And it's just a tougher environment when we're talking pure straight retail as BYON is. But I I just it's sad that would happen. And again, I saw the vicious attacks, and I just don't understand that. That's just ridiculous. But
Yeah. Well,
um,
thank you. Hey,
did you?
by the way,
Yeah,
if this plays itself out and they come out with, a fulsome roadmap for growing the business and becoming profitable, and we start to see some execution against some of the statements of intent, I will change my opinion. And right now, at least for me, I don't see any reason why, at least I need to be long this stock, for all the reasons that we just mentioned. And when things change, I'll be the first to say, I think that things have changed, and I'm personally constructive.
yeah, and unfortunately, I'm sure you'll get a tax for that now then too. Which is, it's like you're damned if you do and you're damned if you don't, Greg. You know, I mean, people.
Believe me, I'm starting to believe that the one common denominator all this is you're going to get attacked no matter what, which
Yeah.
again explains why I pushed away from the table as it relates to Twitter.
Well, can we move on to? Would you like to talk about ENVX?
Yeah, let's do it.
Okay.
So I was very, very, very pleased with the conference call. They announced that they completed FAT and SAT for the agility line. FAT stands for factory acceptance test, and SAT stands for site acceptance test. FAT means that they basically they've tested the equipment at the vendor site and proven that it meets spec at speed. And SAT means that it has been installed and it is working at the ENVX site. The other good piece of news is because the agility line and the high volume line use the same equipment, net of the high speed conveyance to move batteries from one station to the next. The high availability line has basically passed FAT and SAT. So I thought that was very encouraging. I thought it was encouraging that they're producing samples. They have not started shipping those samples to end customers yet, which is consistent with what they said in the prior earnings call. They said they were going to build batteries and test them in advance to make sure that they met all of the customers' qual specs, and that they're going to begin shipping them to the customer in Q3. I thought that was very positive. I thought it was very positive that the CEO said that, quote, we validated our energy density expectations with the EX2M. I think the EX2M is kind of the key for ENVX to get to their unit economic model, where the implication of that is that this is a world-beating battery with such compelling attributes in terms of energy density and fast charge and number of charge discharge cycles that they think they can get a premium of approximately $14 a battery. You put that into a line that can do 1,650 units an hour, you can get to $150 million per line, cost per line, $60 million. The line basically pays for itself in a year. So I thought that was incredibly positive. I thought it was incredibly positive in terms of customer demand. They've had another automotive OEM that they've entered into a development agreement with. They've got a collaboration that they mentioned with an IoT customer that ships tens of millions of units. They had announced an AR, VR, virtual reality deal. I thought, the customer traction was excellent. They also, and again, this was a point of confusion, they also reiterated that when they start producing off of the high volume line, they anticipate yields being north of 60%. And they went on to say that they thought that they would quickly get to yields in the high 90s, which are critical to achieving their unit economic model. So, excuse me, those were all the positives. And in fact, the stock was up, trading in the 16s and after hours. Everything looked, phenomenal. And then the next day, things started to get a little wobbly. There was some concern and confusion about the ATM and their use of the ATM. I think I mentioned earlier that the company confirmed that they're done with that.
Right.
And I thought that was positive, but some people are thinking, oh, geez, they're going to continue to access it. There were concerns about there not being another smartphone joint development agreement announced. I had expected it. I don't know what the status of that is. My fear is that maybe customers are pausing, waiting for the EX2M because it's so compelling. I don't know. People were expressing their dissatisfaction about them not being able to name customers. Not a concern for me. It's standard in that business to not announce customer names prematurely because it could stall sales of existing product. Um, I think that was the call an A call? Yeah, I think it was. Was it an A plus call? No, because I think that they could have done a better job cleaning up the confusion about the ATM and cleaning up confusion about uh, the issue of yields. And then they had some things happen that to me were eyebrow raisers, quite frankly. Um, no sooner do they finish their earnings call than a press release hits the wire saying that they have a 6 million share offering. Well, unfortunately, that created a lot of confusion. In fact, that offering was simply a refiling of the shelf offering from a year ago. But again, in the absence of context, people see that and they rightfully so get concerned that there's going to be a massively dilutive event. Then we saw a filing hit that they registered their warrants. TJ Rogers has, I think, approximately 6 million warrants, and that got confused with, oh, he's registering them, so he's selling them. No, I don't believe that he's selling them. They simply got registered. That's all that means. And then there was a 10b5 filing that hit.
Right.
And that 10b5 filing basically said, in a nutshell, that Raj, the CEO, was planning to sell 639,000 shares of stock between now and the end of January. And, I love Raj. I think he's a great CEO, but, quite frankly, there's only one reason that a CEO buys stock. There can be a lot of reasons that a CEO sells stock. I don't even want to speculate as to what those reasons might be. If you're very bearish, someone might say, oh, he doesn't believe, he's just trying to cash out of his RSUs. I don't believe that's the case. Someone else may say, gee, the guy's only making 500 grand a year. He was probably making a couple $1 million at Micron before he left. Maybe he has some cash flow issues. I don't know, but I don't like the look of that. It's a bad look. It sends the wrong message. It sends the wrong message when people are wanting to buy the stock. Like, why would you want to buy the stock if you know that the CEO is going to be selling, 600,000 shares? It also, in my mind, raises a concern as it relates to his staying power at the company. Right? He had 2 million shares, or has 2 million RSUs. He's planning to sell about a third of them. So, how does that reconcile itself? Do they just give him more shares? I don't know. But I I think in a nutshell, the long-term bull thesis not only remains intact, it's getting stronger. There's obviously work left to do as it relates to getting the high volume line, up and running, and the EX2M completed, and getting more details on how quals are going and new customers. But we had what I'll call unnecessary confusion about things that were announced without context. And that lack of context creates an opportunity for people to speculate. And, some can spin things very negatively in the absence of context, and other people can say, oh, it's not a big deal. I don't think any of the things that I mentioned are a big deal. But I am raising my eyebrows about that 10b5 filing. It's just a bad look.
I think also the timing of the communication, as you talked about. I've been a vocal critic of their IR, and I don't know who they have officially, but I don't think that their IR is doing them service, their investor relations, because you have a good, no doubt about it. I thought the earnings call was very good. It was focused, right? And when that came out afterwards, um, you know, why are we doing this now? We could have done this beforehand, and then sort of add some color during the call, or during the call mention it. We're going to drop this filing, but this is, I'm not, I'm not selling the stock. I'm getting things in line and in a row, but yeah, because otherwise you get, how analysts are, and they're ultimately they got to protect capital too. One of the things that I took away also was, from my perspective, and maybe you can share your opinion or clarify this. I took away that the runway for revenues was extended by another 6 months, and so I sort of look at it like, is this going to be dead money now, for barring any outside, unknown news announcement of a customer order or whatnot? But um, extending the runway for 6 months, then I get into cash position, which I think they'll be fine. But did you hear that too, or am I misunderstanding?
Well, I don't think you're misunderstanding, but I think that is definitely a conclusion that one could draw.
Okay.
If you go back to the company's Q3 conference call, which was in the fall of last year, they were talking about multiple smartphone OEMs ramping in the first half of 2025. Then, if you go to the Q4 call, which they talked about in after the first of the year, I believe was January, or maybe it was February, I can't remember. They talked about, starting in the second half, and now they're talking about late 2025. So it appears as though there's some stealth slippage. I think the other issue that is an issue that only the company can solve, that they really have not come out yet and been explicit about what their ramp schedule and timeline looks like. And in the absence of that, again, people can come up with any number of conclusions. Like, if you're a bull, you can say, oh, Raj is sandbagging, this guy's done it before, he's got these great customer relationships, I'm comfortable with second half of 2025. If you're a bear, you can say, hey, wait a minute, they've been kind of slipping it out, they're kind of reluctant to provide any guidance,
Mhm.
maybe they don't know, maybe it's not going to be in Q4, maybe it's going to be in Q1 of 2026. I think that those are all real issues that only the company can solve. But again, I think the bull thesis remains intact. The bull thesis pivots on the EX2M and getting these customers through a successful qual cycle. But until those questions are answered so that people can effectively model the business, I think that we're going to be subjected to the kind of volatility that we've seen. I think in the absence of excuse me, ATM concerns and yield questions and out of context filings, the stock would probably be somewhere between 15 to 20, instead of being somewhere, between 10 to 15. And, we may see more volatility.
Mhm.
On the same token, as we move forward in the absence of more news, it could be dead money, to the extent that we get more customer announcements and we hear about, you know, the high volume line producing and yields improving. This is kind of a tough time. We're kind of in a time where the narrative is critical, and we need to continue to see proof points that the narrative remains intact and is becoming a reality.
Absolutely. I mean, I've always said that Innovex is a story stock right now. And when you have a story stock with so much potential that Innovex does, you've got to um, continue to update the story with material facts, right? Because that reassures investors, that reassures the investment community But when I heard, the ATM, and I don't think, the thing is, I don't sense, there's not maliciousness. There's not, these guys, I think, Raj and AJ, they're, they have integrity, right? They're not, I think some of the delay are probably, and you would know better as a CEO, former CEO, that the things beyond their control and that for whatever reason they can't comment explicitly about. But it was pretty clear that I took off the previous earnings call, and I checked the transcripts, we're done tapping the ATM. And then they tapped it. And then my other question, why'd you tap it for so little? I mean, I didn't understand that. And I can understand if you're bridging for an operating cash flow basis, but those things matter because at the end of the day, all you have right now is what management telling you, how far along they are on that slash roadmaps, story. Because other than that, we don't have a tremendous amount of visibility to what's going on. Now, I will say that, it's yesterday now in Malaysia, but Cantor Fitzgerald came out after their visit and issued a note and said, I'll read it. The next 12 months should be fun. Sample shipments to the customers beginning this quarter. They see ENVX announcing a platform qualification in the next 9 months, followed by multiple customer announcements. Until then, our confidence level around execution has never been higher. We now view the ENVX story as largely de-risked, and we don't think that ENVX shares have yet to reflect this. As a side comment, Cantor is coming about as close as they can to that line of we have information that you don't have that has been made public yet. But even still, the stock is up today. But even still, I look at that and say, okay, that's all good. I mean, that's Cantor's view after visiting the factory and meeting with management. And by gosh, I hope that happens. But all I have to go on is the short history of the company. And again, I'm not blaming management because I know there are things beyond their control. But they're getting close to the point where, in my opinion, the bank of goodwill that they have is going to get smaller and smaller, and they're going to have to start releasing specific details, right? And I mean, I still see great potential. I'm long leaps. I'd like to get more along them, but at this point, I look at every investment decision on a risk reward basis. What's the probability of a company executing as they say they're going to execute? And then my final comment is, from my standpoint, my gosh, I wish they would put you on the board, or I wish they'd let you, not that you'd want to, take over IR, because, and this has started back in last fall, where I just think they have improved. And I think that trend will continue, but just the dissemination of information could be tightened up just a little bit. And I think it would remove some of the fuel for these unfounded bear attacks on the company itself, right? On the stock. If I had my druthers, I'd talk to Raj and say, put this man on the board, please. So not that you'd want to do that.
I appreciate the vote of confidence, but I do want to answer the IR question because I have a pretty strong opinion about it. I think they have a huge IR problem. And I think I know the reason that they only access the ATM to the tune of around $40-some million. And I think that I'm going to give you the answer that I think should have been given.
Okay.
But instead of Raj just kind of mentioning, like as a throwaway, and here's this quote, we topped up our balance sheet with the ATM, unquote. That's all that was said. Now, a better way of saying it is we topped up our balance sheet to the tune of about $40 million, as Farhan stated at the JP Morgan conference in the first month of the quarter. We're done accessing the ATM. We have no more plans to access the ATM. Now, some of you may be asking why we only did 40 million. And this is what I think that the answer to the question would be. We only did 40 million because we're still working closely with sovereign wealth funds and customers to secure non-dilutive financing for additional lines. That would have been a full credit, fulsome answer that would have taken all the tension out of the system. It wouldn't have given, any wiggle room for the bears to say, oh, they've got this massive dilution and they're going to
Mhm.
keep hitting the ATM indefinitely. That's the job of IR. And the same thing is true for yields. What they should have said is, we've got the high volume line installed for the most part. We're in the process of putting in the high speed conveyance. As we've said repeatedly, we have high degree of confidence that we will start out with yields in excess of 60%, which is where we were at Fremont when we shut it down. And we have every confidence, because we've tested every piece of equipment individually, that it can operate in the high 90% yield range. And we will be getting to our 90% high yield, our high 90% yield target in Q4, like we have said in the past. Done. It's over. There's nothing to debate. There's nothing to make a meal of if you're a bear. But it's those kinds of subtleties that I think are so critical, and it's so easy for management to just assume that everybody listening remembers what Farhan said on the JP Morgan webcast, 4 months ago. And they don't.
But
People
that's the job
forget.
of IR. That's the job of
It
IR
is the
to
job of
guide them,
IR.
right? And this isn't the first time that IR's not done a good job. And I'm
No,
looking at them.
they have repeatedly. I mean, the job of IR is to say, "Hey, Raj, this is what we need to say about the ATM and why, and this is what we need to say about yields and why." And even if it appears to be an over explanation, or even if people may assume that it was said in the past and everybody's remembering, you got to put it in a context. It's kind of like, do you like cold dead fish and cold rice with cold seaweed? Well, no, I don't like that. Well, do you like sushi? Yeah, I like sushi. Right? It's how you phrase it.
Right, right. And I think, and again, I don't know who their IR is, but I think from I've spent 3 decades meeting within IR teams, right, alongside of management. And I've always looked at IR as they're the conduit to make sure whatever is communicated is as complete and factual as possible and is not in violation of any regulations, right? And I, their IR so far has been all over the place. I don't know
No,
what their
I
plan
don't
is.
disagree. I mean that they have a guy with a fancy title like senior VP of IR and strategy,
Okay.
and they they deserve better, in my opinion.
Yeah, and I would hope that, and I don't know if the IR is in house or not, but I think there's a lot to be said for hiring an IR firm, because you also have that firm also has relationships too with those professionals in the investment community. You're a one man shop. I think that's a little more challenging. I don't know what the IR person's background is, but if all I can look at is the work that they've done so far, and I'm very disappointed. And I think actually it's done damage to the stock, and that's my biggest problem with how the flow of information. And you're right, it's just a couple degrees off of center that if they tweaked here and there the way they communicate to investors, I think that would help clamp down a little bit of the volatility in the stock, right? It's because we know that there are active bears in this stock, and they're going to latch onto anything that they can spin with hyperbole that, oh, they're liars and they're going out of business and whatever. And an IR role is to almost preemptively prevent and answer questions that might come up, especially from those that are going to be more critical of the company itself. And I don't see that happening, right?
No, I agree. I mean, if you go back and you look at the volatility of Enovix,
Mhm.
Almost every major decline in the share price has been a function of a botched IR messaging action. And I can name them. When the company announced their shelf filing, it was done in a very tone deaf way. They said, when asked, oh, well, depending upon the share price, we may access it. Wrong answer. What they should have said is that at the end of the day, every technology company on the planet has a shelf filed. We didn't have one, we filed a shelf. Well, when are you planning to use it? Well, we don't have any plans at this moment in time other than to pay for Routejade with shares that were only available as a result of the shelf filing. They didn't do that. The stock got hammered on that. The next time the stock got hammered is when they announced their pivot to focusing on smartphones
Mhm.
and focusing all of their energies behind the Malaysian factory and shutting down Fab 1 in Fremont, California, because the factory was just never going to be a high-speed automated factory that would produce batteries at the yields and at the cost that they needed. They didn't explain why they made that decision. They just announced it. And they were actually like, we don't understand what's going on. Like we told people in the past that, the Fab 1 in Fremont would never get to scale. We told people that, we were going to be focusing on smartphones. But the problem is when they announced it, they didn't provide the entire context. They didn't say, as we've said in the past, the Fab 1 production facility will not allow us to produce batteries in the volume necessary and at the yield and the cost targets that we need. We put all of our energies into Malaysia. This is a logical decision for the business. This is how we can, in fact, save costs and accelerate our efforts to stand up the factory in Malaysia. And that would have been a full credit answer. But
Mhm.
but they just said, hey, we're pivoting to smartphones, and didn't have a good answer about the 1.5 billion in IoT business that they'd alluded to in their sales funnel. So, and there's nothing more frustrating for somebody like myself that has done this and knows how to do it than to watch an unforced error be committed that could otherwise have been avoided, and in fact viewed as a positive, but for the fact that it wasn't communicated effectively or in a fulsome manner.
Yeah, and if we can, I mean, if you look at the body of work, and that's, what IR has done. If I was this, have the audience, if I had Raj's ear for 30 seconds, I'd say, look, um, what you pointed out, there have been multiple times where IR has dropped the ball and it's caused weakness in the stock. And I think it would go a long way, Raj, if you considered replacing your IR, because right now, looking at the body of work that the IR has done, it has produced negative moves in the stock. I mean, IR has always been to me the philosophy of do no damage, right? Do no damage. If you're an IR company, don't damage your client in how you present information. And then I expect a level of expertise where there is a mapped out plan, right? And I just, with the different things they've tried over the last 9 months, from the fireside chats to the podcasts and all of that, I'm just looking at it. There was this sort of running joke I had with my Discord members. I said, well, they're going to have an earnings announcement, so that means the stock is going to go down because that's what had happened the last two times. But yeah, it's a piece that, while I think um, can be viewed as a minor piece, IR is the public face of official information, right? And how it's worded and how clear you are in these statements themselves can go a long way either in increasing doubt and fear and anxiety and unknowns, or reducing that, right? And there's no doubt in my mind that the IR has violated that, do your client no harm statement. So, you know, hopefully, but even in spite of that, I look at the company and I think at this stage, I think it's a blessing that the stock's trading in the double digits. Um, even still with today, I mean, I think, there's going to be those, there's always people on the fringes, right? Now, oh, well, Cantor said this. So, um, but again, that's one person's opinion, right? And maybe I'm old fashioned, but I am going to be very excited when ENVX starts checking off some of these boxes because their potential is so enormous, right?
I agree.
So that leads me to, if you don't mind, EOSE. And I thought, look, and you and I have talked privately about the Cerebrus deal. I think EOSE is, and I would like to hear your answer first. But when I rank NFX and EOSE, I see the runway. Well, let me ask you. You look at NFX, you look at EOSE, you look at Beyond. If you had to rank them in terms of visibility and the path to revenues, earnings, and which will push the stock price up from the best to the third best, right? How would you rank those three companies?
Well, let me take a shot at it. And if I look at EOS right now, and I go back and I look at the slide deck that was put out, and I listen to the earnings call, here's what I come away with. EOS has a pipeline of $13.8 billion. These are opportunities that they've identified. They booked 133 million this last quarter. They've got backlog of $500 million. They received this BNEF certification, Tier 1 certification, which means they're a U.S. manufacturer. The batteries are safe, they're silent, and everything is fully recyclable.
Mm-hmm.
And you look at the fact they've got a factory up and running that is producing commercial batteries, that they've got 9.5 billion in leads, 2.3 billion in active proposals, 1.4 billion in firm letters of commitment that need to convert, and they indicated that they have high confidence that they'll convert. EOS is really an exciting and compelling opportunity if you put it through that funnel that filter that we talked about during our last podcast. Huge TAM, got a $50 billion TAM. They've got unique technology. It doesn't catch on fire. They've got a significant cost advantage. Their CEO talked about the fact that he used the term levelized cost of storage, which to me implies like a total cost of ownership of the battery. They've got a 31% competitive advantage over lithium ion alternatives. I like EOS a lot. I own a ton of EOS. I bought a bunch more EOS yesterday. It's my biggest position. I think, the stock's valued at like $300 million today. Now, if you factor in the service warrants, maybe it's, call it $600 million. This company is, in my opinion, I don't want to say it's a screaming buy for me personally,
Mm-hmm.
because it
Mm-hmm.
checks all of the boxes in
Mm-hmm.
terms of they've got a factory, they've got backlog, they've got unique product, they've got billions of dollars in LOIs. We could be at an inflection point where a year from now, this stock could re-rate to be a $3-4 billion market cap company, which would imply a significant increase in the share price, well north of $10 a share. So it's I don't know that you can even put Beyond in the same category because it's got its own unique set of issues. But at this particular moment in time, I think EOS is the winner in terms of how they stack up in terms of their positioning
Mm-hmm.
from the overall business from an investability standpoint. Um, I there's nothing not to like about EOS. And in fact, I think the sell-off in the stock almost seems wrong-headed, like people were playing for, some DOE loan announcement. Quite frankly, they don't even need the DOE loan to
Right.
scale the business. They've been very clear about that. And now that Cerebus is involved in the discussion, you've got a different cap structure, and you've got, some terms that allow EOS to go and, negotiate a closure of that loan that may have, in fact, better terms than they otherwise would have had without Cerebus. I have total confidence that the loan is going to close. They said they're going to be out in Washington, I think, today.
Mhm.
So, what's not to like about this? I mean, the setup doesn't get much better than this.
Well, you know me, I'm a Philly guy, so I make the comment that anybody who sold after that call is a complete idiot, unless they're raising cash because they just don't want to be out of the market. Because in terms of visibility, um, I would rank EOS closer to achieving um, measurable uh, operational results that have the potential to significantly move the stock. I think ENVX has awesome potential, but they're a little further down the road. But with EOS and in your comments here, you didn't really even talk about Cerebus. I mean, Cerebus, what they have one person on the board, right? I maybe you can add some clarification. I don't know if they are involved, if Cerebus through their contacts. I would hope they are. With the customer financing. And then the second question I'd have for you, is there any way to estimate a metric on a sales pipeline for this space? Have they ever talked about what the assumptive close rate is? If we're looking at all these potential contracts out there, um, I'm making the assumption that they don't believe 100% of them are going to close. And I know they said on the call that some of them they're waiting on just customer financing, right? And so if can you offer any insight to is Cerebus, do you think, involved with helping facilitate customer finance and financing and secondly, um, at what point, I guess, at what point, explain to me why or where we'll have visibility or if there is a standard industry metric in terms of their sales pipeline and close rate.
So I don't know
Okay.
what the standard might be, but if you've got a half a billion in backlog, you just booked another 133 million. You've got letters of intent for almost 1.5 billion. You got a pipeline and outstanding proposals that are totaling 12 billion. Let's just hypothetically say they get 10% of all of that. You've got a company that's doing a couple $1 billion in revenue, and I think, excuse me, and the Joe Mastrangelo, the CEO of EOS, he did talk about a 900 megawatt order that they've received a letter of intent on pending financing that in fact came to them as a result of their relationship with Cerebus.
Oh, that's
And
right.
that even though Cerebus may not be providing financing to this entity, that they're going to provide introductions to companies that they have relationships with to help facilitate financing. So I think Cerebus brings so much to the table. And the other thing that I love about the Cerebus relationship is they've got about $140 million in incremental capital that they'll have access to based on milestones that they achieve in later this month and in the month of October and in January of next year that will result, if they hit those milestones, in another 135 million in cash. So that they know what they need to do. They're focused on hitting those milestones, and we have no reason to believe that they won't achieve them. And I also found it interesting. There's a slide in the deck, in the EOS deck, that talks about why Cerebus chose EOS. And there's an interesting comment that has been made. I think it's bullet number 7. It says Cerebus investment demonstrates confidence in EOS's Z3 product and view that potential demand for EOS zinc-based alternative could exceed the 8 gigawatt hours of production currently planned in Pennsylvania. So
Wow.
8 gigawatt hours is approximately $2 billion in revenue. Um, So Cerebus believes that there's a lot of upside associated with this, and the company is positioning themselves to be able to capture that upside. I I think as soon as we start to see some of these letters of intent convert, and we start to see some of these proposals turn into orders, I think that this company could very quickly be on track to be a $1 billion plus company, certainly exiting 2025. And they're positioned to do it. And they got the factory up and running. I mean, the CEO said that they had 11 customers come and visit their factory since the closure of the Cerebus transaction. 11 customers is a lot of customers.
Mhm.
People don't just fly to Turtle Creek, Pennsylvania, hoping to get a free vacation trip out of it. I mean, it's off the beaten path, and the customer traction appears to be very, very salient, and it's exciting.
Well,
So
I
it's
grew up around Turtle Creek, and I can assure you that that is not a destination for vacation. So, so I know they're not there. You mentioned the benchmarks. I had a question about that. With the release of additional capital from Cerebras, um, what do you think, or what are we talking about in benchmarks? Operational efficiency, certain. I mean, can you provide some color to that?
I, I I can, but it's all speculation
Okay.
because I don't believe that they have disclosed what the milestones are. But I suspect that the milestones have to be with them hitting their cost of goods targets, hitting their second half revenue projections of $60 to $90 million.
Okay.
My sense is that they're operational in nature and revenue based. Maybe there are some yields associated with it, but my sense is they're most likely operational based. And my sense is that that management team would not have signed up to those milestones if they didn't have a high confidence level that they could meet them.
Okay. And when you talk about, would it be, listening to what you read from Sierra's comment, are we talking about the potential for an additional line?
That's certainly the implication.
Okay. Okay.
It's certainly the implication, and there was also a comment that the CEO made about wanting to produce product close to their customers.
Hmm.
Maybe there's a big deal in India. Maybe there's an opportunity to stand up a factory in Europe. I don't know, but the implications certainly are that they're planning to expand well beyond their 8 gigawatt hours of manufacturing capacity.
Wow. That,
And you just look at the sales funnel, you look at the proposals outstanding, you look at the signed letters of intent, you look at the backlog. There's a lot to get excited about here. And then when you pivot and look at the technology, it is the low cost leader. It doesn't catch on fire. It operates better at low temperature. It is 100% recyclable. Um, so they've got an exciting technology. They've got an exciting product. They've got a huge market. And really, the other issue, and I think this is a salient point as you enter an economic downturn, when the economy slows down, companies tend to invest in only two areas. They don't invest in things that are nice to have or conveniences. They invest in things that will help them save money or help them generate revenue. And in the case of EOS and the market that they serve, you've got utilities that have spent hundreds of billions of dollars building out solar and wind farms that cannot operate profitably if they're not able to store that energy and resell it during peak periods. And in order to do that, you need to have a battery backup infrastructure, and that's what EOS does. So, it checks all the boxes. Do I wish the stock was trading at 5? Yeah, of course I do. Um, am I concerned that it's trading at a buck and change? No, I'm not, because I believe that if this management team executes, and all they need to do is execute, this company could re-rate significantly, and it could re-rate quickly, and it could create a significant alpha opportunity for people that are involved. But
you know,
people
my,
need to get beyond the I think that it's almost like a Pavlovian
hmm,
focus on the DOE loan. The DOE loan doesn't matter anymore. The things that matter are the things that we're talking about.
Right.
Before Cerebus, these things weren't really even worth discussing. It'd be like, you haven't had water for 3 weeks and you're about to die from dehydration. People don't want to hear about you getting a haircut or shaving. They want to know where you're going to get your next drink of water. Well, that's all in the rearview mirror now.
Right.
This is a real company with real funding, with real strong financial backing, with excellent technology, a great backlog, a production facility in place, a scrappy management team that, basically, it's like a barroom fight or a brawl or they kind of dug their way out of a really tough situation. It's very impressive, quite frankly.
Yeah, and we talked about this on the previous podcast. They're not a going concern anymore, but they're being priced at. I frankly, I looking at their pipeline, looking at, and in an economic downturn, they're going to have the capital to survive, right? They're going to have, when their competitors are or probably are not going to. And when I look at what Cerebus brings to the table, I'm shaking my head. Certainly selling off, but I think this stock is a gift. If you can buy this stock under $2.50, uh, and to the point where I do a newsletter every week, and I have core positions. Right, 90% of my trading is average of 12 days, but I have positions that they are companies or sectors that I see macro tailwinds, operational tailwinds, that the potential is so large that I will actually make it a core position. And that's something I'm going to put on a newsletter to my members. Like, this is an opportunity. You always hear about, I want to invest in a unicorn. And I'm looking at this now going, well, no, back in March, April, May, they were not. I didn't know if they were going to stay in business, and they needed the DOE loan to stay in business. They don't need it anymore. Okay.
No,
But
they don't.
yeah, but now truly, and I'm not using hyperbole, and contrary to my nickname that people call me Mr. Doom, is I look at EOS and I think, my gosh, what else do you want at this point? When I invest in a company, I want to bet on the management to execute, right? But they have a full sales pipeline. They have plenty of capital in the bank. They've got, for lack of a better phrase, a big brother in Cerebus that their relationships alone are going to add alpha to EOS. But buying it under $2.50 to me is just a steal. And that's assuming only closing, and I did mine off of 5%. I said, well, let's say they, they only close 5% of these things, right? And if you wouldn't mind, I want to flip the script. Okay, what are some potholes that they may hit? One of them is the customer financing. If the credit market sees up, is there going to be customer financing? I think there will be, because of the industry that they're in. There's a big push for this type of technology and battery storage. And so I think they're going to be somewhat insulated by that, but I don't know, right? I don't know that particular credit market. That would be, I think, a pothole. But, and my gosh, I've looked at this very critically, and I'm sitting here saying, all they have to do is continue their momentum, right? And this company, I think if you buy it under 2.5, this is not a recommendation and not advice, but personally, I'm looking at it as a gift. And it's a compelling enough story for me now where I'm going to make it a core position. If I was managing money, a core position for me means every single one of my clients is going to have a portion of their portfolio invested in this company, because I will get paid for the time. I think the risk profile for EOS has been significantly reduced. Significantly.
I couldn't agree more. I could not agree more.
Do you see, are there any, as you look at this company from a CEO perspective, do you see any possible speed bumps, either on a broad macro picture, or, it doesn't look like they're getting over their skis, right? They're not announcing, we're going to expand into, we think there's going to be demand in Asia. So they're not doing those things, right? They're focusing on fulfilling and capturing customer contracts and then fulfilling them. Do you see any things that you look and go, well, that's something to keep an eye on?
Well, I think you hit on the most important one, which is a lot of the LOIs that have not converted to backlog yet are probably sitting in that bucket for one of two reasons. Either the customer wants to conduct a pilot and validate the specifications and assumptions that they use to make the decision, or being able to line up financing. I think if we
Mm.
see the first Cerebus facilitated financing of a deployment, it starts to take that issue away.
Okay.
And I also think that, to the extent that I'm a utility and I have, spent billions of dollars building my front end clean energy generation with wind farms or solar farms, to make them economically viable, I've got to find a way to fund this, or I'm going to continue to basically run my infrastructure at a loss.
Mm.
And then the other thing that is a positive that really wasn't discussed in any detail on the call, and I think it's a real opportunity, is, with the advent of AI, the data center power consumption actually can increase up to 9 times of normal consumption in a non-AI data center. And I think the implications of that are that there's a significant opportunity for EOS to provide data center battery power backup for some of these, very large data centers that consume, vast quantities of power. So I think the market is moving towards them in a rapid rate. And I think the technology is compelling from a architectural standpoint, and the zinc aqueous technology not being flammable, and they've got significant economics that make them more competitive than competitive alternatives that, you could have a 3 acre lithium ion battery fire, and it's more expensive and has a lesser life. I mean, EOS has a 20-year life, where typical lithium ion, has less than 10. So it's all there, but they do need to prove, I think, that they can convert these LOIs to revenue and that they're able to help facilitate financing for some of these deployments. I don't think all of the LOIs or all of the customers in the sales funnel that they've got proposals out for, are predicated upon them lining up their financing. It's just we don't know what percentage that is, or what that overhang is. But other than that, it really is just about execution risk. And these guys have at least proven to me that they know how to execute, and they're scrappy guys, and they're gonna basically bust through to the other side. And then I think when they get that escape velocity, like if they can go from 60 to 90 million in Q4 of 2024, and they can, guide to $500 million or as much as $1 billion in revenue in
Oh, my.
2025, that this company is so inexpensive by virtually any way that you'd want to value it, that at least for me, and I'm not giving advice, I've got a huge position, because I think now is the inflection point.
Would you agree with, or what's your point of view on if they're able to close, let's say 10%, um, in terms of capital needs for expansion? My back of the napkin was that they may not have to additionally tap the capital markets in the next 12 to 24 months.
I don't think they will need to.
Hmm.
If I'm correct, and again, I apologize for not having this at my fingertips, I believe that an incremental EOS line is around $50 million. So with the capital that they will access as they hit their milestones, they'll have more than enough capital to build out an additional line or two. And I do believe that they're going to bring in this DOE loan for a landing. Like why anybody is surprised that they need to have follow-on discussions about, capital structure as it relates to, uh, basically the stack of creditors it shouldn't be a surprise to anybody. They're in a much stronger position. They don't need to go in with their hat in their hand, and they
Right.
can have a fulsome discussion. It sounds like it's a three-party discussion now. The DOE's risk has gone down dramatically from what it was before Cerebus showed up. So the DOE, they know they're going to get their money back. I think they're going to close it. When they do close it, uh, there's a belief, and I share this belief, that they'll actually be reimbursed for monies that they've already spent on the first line. Some people have modeled out around $80 million. So it's just going to get better, and it's just going to give them more levers to pull to scale this business.
Yeah, I've got, with in terms of the management, I give Joe credit because the fact that he was able to attract Cerebras at the position they were at that point, because it was tenuous, quite frankly, for the first 5 months, 6 months of this year, is I'm impressed, quite frankly. I really am impressed. And then the whole DOE delay thing, I mean, you're dealing with the federal freaking government. It's not as though we're dealing with the most efficient operation in the world. And so the DOE loan and all that issue, I think the stock will pop on it, just because it'll be something that people have been obsessing about for so long. But I think and I think you've said this, that it's in a different context now, right? It's a totally different context. Use the phrase of going to them with your hat in the hand. They're in they absolutely should renegotiate the terms of the DOE loan. They're the ability for the government to get back their money. Their risk profile, I'm not going to say it's zero, but it's pretty low right now that they won't get paid back, right? Whereas 6 months ago, it was a high risk, investment that they would make into EOS. But I'm excited. I mean, I'm excited, for both for ENVX and EOS. I don't, full disclosure, I don't have any money in BYON. And I'll be honest with you, Greg. The reason why I don't have money in BYON is because some of the parties that are involved in it, quite frankly.
Mm-hmm.
I am the type of person that our business, investment, corporate business is built on relationships. And I just don't. I like to see companies operate without undue commentary from third parties who can flip the switch at any time. So that's primarily the reason I haven't been involved in BYON, and I probably take much more of a negative picture on where we're headed for the economy. And again, it's something beyond Lamonis's control. And I think, as hard as I am on management, when I examine a company, I do take into account that whether it's ENVX, whether it's EOS, there are things that are beyond their control, but they're doing what they can do. And you mentioned the 11 customer visits. I got to think those customers visited because they said to themselves, well, now we know they're going to stay in business, right? They're going to be able to fulfill my order because now they have the capital to do so.
Mm-hmm.
I mean, if I'm looking at it objectively, I'm looking at the evidence that's come out in the last 60 days, it's a different company. It's a different profile on that, on EOS right now. Would you agree with that? Or
Oh, 1,000%. And I think that people that have been viewing EOS through the lens of the DOE loan are really missing the big picture. And if you can set that aside and just go up to the 50,000 foot level and look at the TAM, look at the technology, look at the benefits to the customer, look at the funnel, look at the backlog, look at where they are from a production standpoint, look at the management team. It's all there, and they just need to execute. And we need to see some successful conversions of these LOIs into actual backlog based on either funding being lined up, or the customer getting comfortable now that EOS will be, a solvent going concern, and they're now in a position to test the product and know that the product meets spec. I think it's a heck of an opportunity. I mean, look, none of these companies are risk-free.
Mm-hmm.
And, there's always, we're not talking about a company that's been around for 30 years that is doing billions and billions in revenue, and they've got, well-established distribution channels, and the product cycles are well understood, and the roadmap's well understood, and the unit economics are well understood. That this isn't an Apple, that this is a small company that is an emerging growth company in a very exciting segment that has incredible potential. And that's where I think the big money's made. Like, you can actually own a significant position
Yeah.
in ENVX or EOS that can be life changing to the extent that these companies execute. Because I can do some math and very easily get to north of $30 to $40 a share with EOS if things go swimmingly well, or $100 with ENVX. Is that going to happen? I don't know. Could it happen? Yeah, you can get there from a mathematical standpoint, and that's what makes these opportunities special.
Mm-hmm. Mm-hmm. What? How involved? So from Cerberus, with a board member, how involved are they? Not on the day to day, but on the strategic planning side. Uh, are they guardrails, so to speak, for execution of the business plan? Are they more in depth? What's your feel on that?
I don't know is the answer, but if I had to speculate, I believe that the guardrails have been put in place with the milestones
Okay.
to access incremental capital. So I think they have command and control over the direction of the business and what the expectations are from an execution standpoint.
Okay.
And to the extent that management executes, I think everything is going to be great for all parties involved. To the
Okay.
extent that management does not execute, the implication is that Service is in a position to, drive to a particular outcome that they may want. So, I mean, they really are in control, but I think, at least based on the structure of the deal and the way this came down, they've got, for lack of a better term, soft hands.
Hmm.
They're not, shoving around a 3 or 4 year old as a grown adult. They understand where the company is. They understand what the company needs to do, and they're a strong parental like guiding force, which I think is very, very constructive.
I agree with that because EOS has been operating under within the environment of scrapping, as you said, scrapping. They may be faced with a different challenge, which is when there is abundance, right? How to grow the company and deploy capital responsibly when you have an abundance of customer orders. As a side note, I saw a comment. Somebody was, pissing on the Cerebus news, and they said, "Well, Cerebus is $69 billion, and they only gave EOS 315 million." I sat there and I said, "What is the problem here?" Right? So we're gonna piss on the Cerebus deal because Cerebus didn't commit more of their percentage of the value of their firm. That's just ridiculous. It just shows me, people will pick, they'll create in their own mind sometimes if they're negative on something, and just as much as you and I've talked about, if they're positive on it, they'll just look through those, that whether it's rose colored or gray colored glasses. And but the shift, and I'm seeing the shift also in some of the Twitter comments, and because other than the after the earnings call, it's been fairly quiet, right? And I'm excited for them, and I think you're right. This is a special opportunity. It doesn't, no way does it mean that it's guaranteed, nor does it mean that it's highly probable. But if you look at from my perspective, you look at a company, you've got to line up, take a piece of paper, pluses on one side, minuses on the other, and right now there are very few minuses, and the plus side is fantastic. And so the probability is, my gosh, the probability of them executing and achieving success has gone up substantially for me. It's just really, really exciting. And today's, the drop in the stock price, and yesterday's, I just look at that and think, well, yes, this is again, short-term thinking because they're obsessed over this silly DOE loan. Not silly. Let me rephrase that. They're obsessed over something that has been the focal point, and they need to adjust their thinking and mindset, as you've said. And correct me if I'm wrong. Did you not have a personal experience with a battery going wrong?
Yeah.
Okay.
Yeah. No, I did. I had a spontaneous lithium ion battery ignition in my barn that burned it all down. And, for a battery that costs, $100, it's caused over $1.5 million in damage.
Oh my gosh.
And it's a real issue. It's a real issue that I'm actually shocked that we haven't seen, some regulation, whether it's with, UL or whatever the governing bodies are. But this is dangerous stuff. There's a video I saw on YouTube today that somebody sent me that showed a dog gnawing on a lithium ion battery in someone's house when they weren't home, and it caused a huge fire. Luckily, the animals escaped through the doggy door, but this
Really?
is serious stuff. And imagine having 2 or 3 acres of batteries backing up, a wind farm or a
Mhm.
solar farm. Imagine if that caught on fire.
I think we
But
just
I do
saw.
want to address the
Sure.
comment that you shared from the individual that said, "Oh, Cerebus, there's 65 billion. All they did was put in 300 billion." See, that kind of stuff is, and I don't want to be flippant, but when I hear that, I think, tell me that you don't know what you're talking about without actually saying out loud, "I don't know what I'm talking about."
Yeah.
Because the reality is that the money from EOS came out of a $2 billion fund. That's my understanding.
Okay.
And it's a growth fund. It's not their typical distressed lending business. And if you look at $310 million from a $2 billion fund, that's a pretty significant percentage of that fund.
Yes, it is.
And, and the other piece of this, if the service guys were heavy handed, that they could have very easily said, "Hey, run this thing into bankruptcy, and we'll buy it out of receivership for pennies on the dollar, and we'll
Mhm.
reconstitute it." And I mean,
Yep.
they could have done all kinds of things, particularly with how close the company, to use an airplane analogy, I think they were flying at treetop level on
Mm,
fumes,
mm.
and they could have driven that thing into the ground. But I think they negotiated some favorable terms for themselves, and I think that they set up the company to win. And I think that, to the extent that the company executes, Service could have a 10, 20, 30x return on that investment. I think that's a pretty damn good investment.
Yeah, and the clarity to that to the end result is so much more believable that they're going to be able to achieve it now. It's just I'm just so impressed. I was shocked when they announced the Cerebus deal. Quite frankly, I thought, wow, because to your point, there are those vulture capital guys out there that come along and say, we're going to raise your money. And then they look and say, well, we'll just wait, privately, we'll let this company go into reorg or bankruptcy and we'll just buy the tech. Right. And then we'll go run it or we'll sell it. But, we'll just take the meat off the bone. But they didn't. So they obviously also see and have confidence in the management too, which
Oh,
is, you know,
I don't think that you can emphasize what you just said enough. I mean, I personally experienced it. I was a VP of sales many years ago at a company called BYON Systems. We're a network operating system software company, and we competed against Novell. And Microsoft approached us saying they wanted to buy the company, did extensive due diligence. And then at the end of the day, they just they gave the VP of engineering and a couple of his lieutenants, $2 or $3 million signing bonuses to come to Microsoft, and really damaged
mm,
Banyan.
mm,
Cerebus could have done the whole due diligence and said, you know what, we'll just, we're going to pass. And then they would have known everything, waited for the company to become insolvent, and then reconstituted the thing. And, they could have ended up owning the whole company, probably for what they have on the table for owning, 40% of the company.
right,
But
right.
they seem like they're solid operators, fair people. They want to structure win-win deals. Management pass muster, and in the slide that Joe Mastrangelo showed, he had, this list of 10 reasons why Service chose EOS, and they waded into the technology, they waded into the production capability, the ability to scale the business, they waded into COGS, they waded into, the integrity of the backlog, the sales funnel. I mean, we basically, as investors, we get the free benefit of the extensive due diligence that they did.
100%. 100%. I'm glad you mentioned that. And due diligence done by people at the top of their game. I mean, this is not some recently minted MBA out there, right? Working at an analyst position, junior analyst position. These guys at the top of the game. And you're right. The deep dive that they did is, I think investors would be shocked at what goes on for that type of due diligence. I know when we did IPOs or private placements, and they were nowhere near this level of investment, the due diligence we did, and so I like the partnership. I both parties are. What I'm seeing is they're delivering on what they said they can do. And I gave them a lot of grief last year over the bridge loan and all that. And now it's water under the bridge. And that's one of the other things I want to comment on. This is more for our listeners. Look, there's new data comes in on a company. You got to reevaluate your thesis, and last year, and I get grief. Well, now you're long ENVX, now you're long EOS. Yeah, because the data has changed, right?
Right.
Probability has increased. Why wouldn't I be long? Just because I didn't like it yesterday based on the data then doesn't mean with new data coming in that I don't, change my mind and I like it today. And again, I'll say it, people who are selling this stock I'll tell you what's going to happen. They're going to sell the stock and they're going to be first in line to buy it when it hits over $5.
Mm-hmm.
I know it. I've seen this happen before. So, it's super exciting. One final question I have for you, I want to get your opinion on, my listeners know that where I stand politically. Is there any political risk depending on if they're able to steal the election from Trump again? If Kamala gets in office, do we have any regulatory issues in terms of the green energy and battery storage that could affect? I see that as a very low risk, but I did want to get your opinion on that.
Sure. I think if Kamala wins, there's zero risk that the Inflation Reduction Act gets repealed.
Okay.
If President Trump gets reelected, I think there is little risk that component, the EOS component, in terms of the tax credits and the financing, gets touched at all. As a matter of fact, there was a headline that I saw where bipartisan and Republican senators went to Johnson, or congressmen went to Johnson and asked him not to attempt to repeal the act. I think the benefits are bipartisan.
Okay.
And the benefits benefit America. Now, there may be elements of that, like the government trying to, put in 3,000 charging stations. It might be a bad idea. But, the stuff that they're doing with EOS has, obviously, the due diligence that Jigar Shah is doing at the DOE shows that they're being very thoughtful in terms of how they're vetting companies for the conditional approval process. They're treating it like it's a serious thing, not like it's a government handout. And the benefits are clear. So I just can't imagine a scenario where the apple cart gets tipped over, regardless of who wins the election.
Awesome. Well, boy, I really appreciate your insight. Did you have any closing comments that you'd like to offer? I know that I'll tell you, when we did our last podcast, the feedback was just enormously positive. I got no negative comments from it. And the feedback that I got back was consistent. You guys have objectivity, knowledge, You talk about things in terms of risk to reward with real facts. And there is a hunger for this out there, right? And so I'm again, so thank you so much for agreeing to come on, despite being treated horribly in Twitter space and by those idiots. But any closing comments about any three of these companies that you'd want to share?
I just want to thank you for inviting me on and for creating a venue for healthy, constructive discussion where we can critically analyze companies, and I can at least share my experience, which is just from an operating CEO standpoint. I'm not a professional investor. I don't manage anybody's money other than my own. I don't participate in, stock pumps. I'm not a member of a cult. And I think part of being a successful person, whether it's, your ability to look at the political commentary and make your own decisions, or your ability to make decisions in your life
Hmm.
based on relationships as new data becomes available. Let's say that you're in a relationship with somebody, and you every time you go out with your girlfriend, you see her flirting with other guys. Well, that's a new piece of data that might tell me that she might
Right.
not be the right one,
Right.
right? So it's almost crazy to invest based on a thesis and then completely close your eyes and become belligerent when somebody posits an alternative theory. Why wouldn't you want to at least discuss it and understand it and explore it so you can put it into your decision making lexicon? And if people get upset by that, or people say, hey, this guy's a windsock, or no, I think that anybody in your personal life, or how you think about politics, or even how you think about, should I take the vaccine or not take the vaccine? I mean,
Hmm.
just use your brain and look at the data and think about the positives and the negatives. If people that are voicing an alternative opinion are being canceled or attacked, maybe their opinion is even more valid than you would otherwise give it credit for, because you need to question why those people are attacking somebody who's coming forward with a principled opinion. So I really like this forum, and I really like the dialogue and the discussion that we've had. And the one thing I do want to say in closing is I've gotten hundreds of very, very nice and kind messages from people saying how much they appreciated my insight and my contribution on Twitter. And I kind of view this as a way for me to, share my thoughts so people can still have the benefits of my thoughts. They can discard them if they want. They can incorporate them if they want. They can do nothing if they want. But at least it doesn't open me up to a barrage of insults and attacks and allegations of, nefarious behavior, or attacks against me and my family. So I want to thank all the people that took the time to send me very kind messages. It's very much appreciated.
Maybe one of those guys are the ones that went in and chewed on your lithium battery in your tractor.
I,
I
I,
don't know. I'm just
I,
saying that looking at some of the comments, the derogatory, stupid comments, I'm like, well, I don't know. Some of these people I could think would be in a cult, actually. So, well, I will tell you that for as we go along, um, and to our listeners, that as material things and developments come in these three companies, I will continue to um, ask Greg to come on to the podcast so we can discuss these things. And also, for those listening, if you have questions about other companies that you'd like mine or Greg's or both of our opinions on, please send it to podcast at MrNotAdvice.com. Greg's taking a break from Twitter, and Greg, that's what happens. That's a symptom of being successful, right? You have been successful. You are successful, and I think when people um, they listen to successful people, and they allows them, they seem to have the freedom to turn off their own brain and make their own decisions. And so I think a lot of it goes on because people just don't take responsibility for their own decisions. And so But I'm going to continue to hopefully have you on, and we'll continue these discussions. And please, for those listening, please, you can find me at my website, MrNotAdvice.com. Any messages or questions, if you want to direct them to Greg, send it to the podcast at MrNotAdvice. I will forward them to him. And if we can, we'll talk about it in the podcast. So thank you so much, Greg, for coming on today. And I know you've been fighting a cold, so thank you for doing that also. And yeah, thank you so much for coming on today, Greg.
It's my pleasure, and thank you for having me, and wish you the best of luck until we connect again.
In my view, oh, my joy and I pursue. I'm running for the city. I got the new word in my blue.
They ain't got no muscle, no hustle, no backbone. I stand alone, not tripping, just saying I'm different. Ain't hanging on to the